real bull market in the gold-related equities, I think we need to cross 2,500 because then I think we're in the very first inning of the structural new bull market in gold and gold-related investments. And it might take a little while. Structural production deficit in silver. Silver mine production, there are hardly any silver mines left. Here we'll see a very rapid rise of the silver price. Yearly physical demand is growing fast towards 1,300, so 1.3 billion ounces. So there's a huge structural deficit in the silver market. And one day this will lead to a huge spike in the silver price.
The market for gold-related equities is on the brink of a new boom. But to fully ignite, gold prices need to surpass $2,500. We are at the early stages of a structural bull market in gold and gold investments, and it may take some time to gain momentum. Similarly, the silver market faces a significant production deficit, with very few silver mines in operation and yearly physical demand approaching 1.3 billion ounces. This growing structural deficit is likely to trigger a rapid rise in silver prices, potentially leading to a significant price spike in the future. Willem Middelkoop is a Dutch investor, author, and commentator on financial markets and economics. He is known for his insights into macroeconomic trends and the gold market. He tells gold and silver prices are often influenced by the selling of paper futures on the COMEX system, but trading is gradually shifting from the west to the east, particularly towards China and Shanghai. Uranium, like silver, has been bottoming out, and prices could surge rapidly due to strong fundamentals. Currently, there are about 400 nuclear reactors worldwide, with another 400 planned or under construction, driving strong demand for uranium. Supply and demand projections show a significant production deficit after 2030, which has already pushed uranium prices from $20 to nearly $100 per pound. After a small correction, a second wave of the rally is expected around 2025 and 2026 due to these ongoing structural deficits. Willem Middelkoop also suggests that investors often expect constant gains, but markets fluctuate. Uranium stocks like NextGen Energy are consolidating, presenting a buying opportunity ahead of the next rally. NextGen, nearing final permits, could soon supply 20% of the world's uranium with $2 billion in annual cash flow, making its $5 billion market cap appear low. Revaluation usually occurs 12 to 18 months before production, with companies like COMEX also poised to benefit from the uranium boom. Similarly, demand for copper is expected to rise significantly, with risks of severe shortages by 2025 and continuing into the 2030s due to a lack of quality copper discoveries. This anticipated shortage is likely to drive copper prices higher. Consequently, 25% of investments are directed towards copper-related companies. Investors can gain exposure through the COMEX ETF for copper and the URA ETF for uranium, which are both effective ways to invest in these sectors. Let's jump into the video for more details. If you like what you see, please thumbs up and subscribe to our channel to stay updated with our latest content.
The silver and gold prices are managed because of the selling of paper futures on the COMEX system, but now more and more of the trade is moving towards China, moving towards Shanghai. Even the future market, future trading is moving from west to east. I think we've been beating the drum still since 2016, 2017, that uranium was bottoming out, just the way silver is bottoming out now. And warning people that you could see a very rapid rise of the uranium price for fundamental reasons. We have 400 nuclear reactors worldwide producing energy. We've got another 400 new ones planned or being built. So the structural demand for uranium will be very strong. And if you study the supply and demand fundamentals for uranium, you'll see after 2030 there's a very strong and growing structural production deficit in uranium as well. So this has resulted in a first move for uranium from, let's say, $20 per pound towards $100 per pound. We're in a small correction now, but this first leg of this huge rally in uranium will see a second leg somewhere around, I think, 25 or 26, because we are reaching that period where we have these structural production deficits also in uranium. But investors always want to see stocks go up every day or every week or every month. Well, that's not how the markets work. So we had a very first powerful leg up. Now we're going sideways. Wait for the breakout and then add to your uranium positions again for the next leg up. We've been concentrating since 2015 on the largest discovery in this space, and that's next-gen energy. Next-gen energy had a great run. It ran up to a market cap of 5 billion. There's a nice correction now, and that's a wonderful opportunity to add, because if next-gen energy receives their last permits, and that's very near, very close, then they only need 24 months to reach production. Once they're in production, they will supply 20% of all uranium worldwide, and their free cash flow could be 2 billion a year. Well, if you have free cash flow of 2 billion a year, the current market cap of 5 billion is still very low. So I still see a lot of upside for next-gen energy once they're in production. And we often know that there's a revaluation of companies before they start their production. Let's say this revaluation starts 12 to 18 months before they reach production. And Chemical, of course, is another strong company with a very strong balance sheet who will benefit of this structural boom market in uranium. Many more people to use a lot more copper in their homes. So demand for copper will rise. And there's a real risk we'll see serious copper production shortages after 25 as well, and growing into the 2030s. And if I look at the current rate of copper discoveries, there are not enough quality copper discoveries around. So it's not that hard to predict that there will be copper shortages coming, and we'll see much higher copper prices. And this also explains why 25% of our investments are in copper-related companies. It's just like uranium space. You have a wonderful ETF, which you can use. It's a basket of companies. So the COPX is a great vehicle to invest in if you want to just invest in the copper space. And for the uranium space, you have the URA ETF, and we use both of them to play the sector.
Since the 2008 financial crisis, the Western dollar-centric financial system has shown signs of reaching its end. Eastern and Southern countries are aligning with BRICS, moving away from reliance on the US dollar. Turkey's interest in BRICS underscores the growing stress within Western economies, which are grappling with rising national debts and resorting to stricter measures to maintain control. Willem explains the trend of deglobalization shows the West increasingly distancing itself from the rest of the world. The Western alliance, comprising about 1.5 billion people, contrasts with the 6 billion people from 140 countries, including those that did not support sanctions against Russia. Many of these nations are joining the BRICS alliance, which is gaining enough power to challenge the West. This emerging multipolar world could offer more freedom and choices globally, as it creates a counterbalance to Western influence. History shows that price controls are often implemented during high inflation and potential hyperinflation scenarios. As the U.S. faces economic strain, there's concern that it might resort to drastic measures, such as escalating conflict with China or using political figures like Trump as scapegoats. While it's hard to predict specific outcomes, the global situation is precarious, with the US, China, Japan, and Europe all facing severe economic and social crises that could pose serious threats in the coming decade. Let's get back to the interview.
Since 2008, since the great financial crisis, we actually learned that our way of living in the West, the way we built the system, the US dollar system, we reached the terminal phase of the international financial system centered around the dollar. Countries in the East and the South understand, and they're joining, and they're lining up with the BRICS alliance. The BRICS alliance is preparing for a point in time where they can continue to do business without the US dollar system. This won't happen overnight. The BRICS alliance needs time to build. Even Turkey, which is a NATO member this week, said that they want to join the BRICS alliance. So there's a lot of stress building within the Western dollar system. And I think governments are getting scared by everything what's happening. They see the huge build in national debt, especially in the US, but also in the UK and other countries. Japan has a big problem. So governments, when they get a bit scared, they are looking for new laws to become more powerful. The deglobalization trend, and the West is moving away from the East, or actually you should say the West is moving away from the rest of the world. If you look at the Western Alliance, it's just 1.5 billion people, 350 in the US, 500 in the EU. You have some people living in Japan, Australia. So it's 1.5 billion people. If you look at the rest of the world, the 140 countries who didn't join the West in Russian sanctions, the sanction against Russia, that's 6 billion people. And a lot of these 6 billion people are joining forces within the BRICS alliance. So I don't expect a development where the whole world will choose the same laws or the same approach during a pandemic. And in a way, this creation of the BRICS alliance, which is powerful enough to confront the West, it's always best to look at history. And that's why price controls are not that hard to predict, because they've been used time and again in each and every situation where you have growing inflation and you're on track to reach hyperinflation. But of course the US will play a few tricks to survive. And actually that scares me most, because the US might be tempted to follow a scenario where a large conflict, for example with China, would be their preferred way out. Or there's also a risk that they'll use Trump as a fall guy. If he gets elected, well, let's make him the fall guy. It's very dangerous to point to more specific scenarios, because the future will always be different than you can envision. But we're clearly reaching a very dangerous situation where China is in crisis, US is in crisis, one could say. Japan is nearing an end game. And also the UK and here in Europe will face many very, very serious, maybe life-threatening problems in the next decade.
The global financial landscape is shifting as resource markets face structural deficits and geopolitical tensions challenge the dominance of the Western economic system. Investors need to remain vigilant, as these trends could reshape the markets and create significant opportunities and risks in the coming years. What are the potential geopolitical and economic consequences if BRICS fully decouples from the dollar-centric financial system? Let us know your thoughts in the comments. We'd love to hear from you. If you enjoyed the video, please give it a thumbs up and subscribe to our channel for more insights. Thanks for joining us on this journey.